Something huge just happened, and it might redefine the future of the US economy, the dollar, and even the global balance of power. President Donald Trump just walked away from the Middle East or West Asia with two of the largest foreign investment pledges in American history. One from Saudi Arabia, a $600 billion economic partnership spanning energy, technology, defense, and infrastructure. Second one from Qatar, an even larger $1.2 trillion commitments, including a massive commercial aviation order and a deep technology investments. In total, that's $1.8 trillion in Gulf capital flowing into the United States. But here is what makes this moment historic. This isn't about oil, it's not about war, and it's not just about jobs. This is about reshaping how the world sees the United States dollar, and it might just be the first step in a quiet attempt to revive the petrodollar system. This time, backed not by oil, but by an American innovation.
Donald Trump signed the biggest arms deal in history. He's lifting all sanctions against Syria.
The Middle East is defined by commerce, not chaos, where it exports technology, not terrorism.
In the last hour, President Trump has arrived in Saudi Arabia. The president's hoping to secure significant new investment in the US.
He has a very strong personal relationship with the de facto ruler of Saudi Arabia.
The United States and Saudi Arabia have signed a $142 billion arms deal on the first
Prince
day.
Mohammed bin Salman is pledging to invest $600 billion in the U.S. the largest defense sales agreement in history.
It is very elaborate based on what we saw. The goal on this stop, $1 trillion of investment in the U.S.
Business deals are the priority on the trips, and geopolitics are sort of secondary.
I would like to give a big thank you to our show's sponsor, Axcap Ventures, Inc. Let's rewind for a second. Back in 1974, after the US dollar was severed from gold, the United States struck a landmark agreement with Saudi Arabia. In short, price your oil in a dollar and we will provide security and military support. This created the petrodollar system, a financial engine that secured global demand for the US dollar and, of course, allowed the United States to run deficits, project power, and remain the world's reserve currency. But in recent years, cracks have formed. China and Russia now trade oil outside the US dollar. Saudi Arabia has signaled openness to selling oil trades in yuan. And the BRICS countries are openly working on commodity-backed currency. Why? To challenge the dollar. So when Donald Trump lands in Riyadh and Doha and announces $1.8 trillion in commitments, the real question becomes, is this a counter-strike? Is this Trump's attempt to re-anchor global capital to the dollar, not through oil this time, but through technology, aerospace, and next-generation infrastructure? Let's look at the numbers. From Saudi Arabia, you have a $600 billion economic package over the next decade that includes defense deals, joint R&D, research and development projects in advanced technology, energy investments, and AI development hubs. Notably, Saudi Arabia is reportedly committing $142 billion to US defense and aerospace technology, a sector critical to both economies. From Qatar, you're looking at a $1.2 trillion agreement built on a long-term economic cooperation. It includes a record-breaking $96 billion order for 210 Boeing aircraft, the largest wide-body aircraft order in Boeing history. a $1 billion deal with Raytheon for air defense systems, a $2 billion agreement with General Atomic for MQ-9 unmanned aerial system, plus major investments in quantum computing, AI, green infrastructure, and smart city developments across the US. Qatar isn't just buying products, it's embedding itself into the future of America's digital and defense ecosystem. This is no longer about buying oil in dollars. This is about building the next generation of global infrastructure in dollars. So, what does this mean for the dollar? Well, in 1970s, the dollar was tied to energy. Today, it is being tied to something new called technology. If Trump's strategy succeeds, access to the US-based chip making, defense systems, quantum computing, and clean energy infrastructure may require deep financial ties to the US economy, and by extension, to the US dollar. This is what we might call the techno-dollar, instead of the dollar being backed by barrels of oil. It will be backed by networks, servers, software, satellites, and semiconductors. That's a very different, but potentially even more powerful form of global leverage. But let's not get ahead of ourselves. There are still skeptics out there. Some argue that these deals are largely political, big numbers with soft timelines. There are no binding laws or legislation yet, and parts of these commitments may take years to materialize. That's true, but here is what we can't ignore. Even if only half of these numbers are realized, this still represents the single largest Middle Eastern capital infusion into the US since the petrodollar era began. And it's happening at the exact same time that 1. BRICS is building an alternative to the dollar. 2. Central banks around the world are hoarding gold. And 3. And questions about the dollar longevity are growing louder. This move is not a coincidence. It's a calculated alignment of capital, influence, and innovation. And it may be designed to give the dollar a second life, not as the currency of energy, but as the currency of technology. So, next question is, what comes next? Here is what to watch for. 1. Will Saudi Arabia continue to price oil in a dollar or start selling more in yuan? 2. Will Qatar, flush with capital, continue embedding itself in US tech, especially AI and quantum systems? 3. Will other Gulf nations follow with similar tech-centric dollar-based agreements? And 4. Will China see this as a threat to its own plans for the digital yuan and BRICS alternatives? Because if this trend continues, we may look back on these announcements not just as business deals, but rather as an opening shots of a new monetary era. So just consider the ways by which you can protect your wealth or invest into opportunities. This leads me to talk about today's sponsor, Axcap Ventures Inc., stock ticker GARLF. I want to present to you next, maybe for the first time ever, very important data. Must see this data and take you in depth on gold. I call it breakout moments for gold in charts. The bull market in the 1970s, which was about 200 all-time high for gold. The 2000s bull market was just over 100 all-time highs. The present bull market has only seen 74 new all-time highs so far. While gold spot prices has seen a collective 180 new all-time highs in the past 25 years and has more than tenfold for a century to date appreciation of 1,233% from February 2001 lows of $255 to its price. The same cannot be said about the companies that explore for gold, develop projects, and operate mines. The gold mining industry has faced a critical crisis over the past 15 years. 1. From 2010 to 2025, exploration budgets have stagnated or declined. 2. Discoveries have plummeted between 1990 and 2023. 350 deposits containing 2.9 billion ounces were found, but only 29 occurred post-2010, with no main discoveries since 2016. 3. Global gold production has stagnated with projection of a 17% supply drop by 2030. Existing mines are depleting faster than reserves are replenished. These underinvestments in new deposits is such a huge, momentous driver for a likely supply crunch. Mines are depleting. It's a fact. No major new discoveries. That's another fact. I am incredibly bullish on gold. Wall Street investment bankers are even bolder than I am about the future of gold. The last major bull market for gold-related companies occurred more than 13 years ago. While gold has appreciated by 75% from 2011, the GDXJ index has appreciated by 63%. After a decade of little to no activity in gold M&A space, the sector is waking up. This past month, legendary hedge fund manager John Paulson agreed to acquire 50% of the underdeveloped Donlin gold deposits in Alaska for about $1 billion. This is the best time, in my opinion, to be looking at companies that own large known deposits of gold in prime jurisdictions. The setup is gorgeous, by the way. Everything I just laid out brings me to today's sponsors, Axcap Ventures, stock ticker GARLF, whose insiders have been buying stocks in recent weeks, as I will show you. Axcap Ventures, once again, stock ticker GARLF, was incorporated to make investments to rapidly capitalize on the distressed conditions of the gold industry. The managements assume that their assets, which are comprised of about 5.57 million ounces of gold equivalent resources in the measured and indicated category, and an additional 0.15 million ounce inferred, are valued around $6 an ounce, while peers are trading for 8 times as much, or about 700% more, could be re-rated. You heard it right. Start researching Axcap Ventures, stock ticker GARLF. Their thesis is based on the case studies of previous instances in which similar situations have led to meaningful appreciation. Axcap Ventures' flagship converts projects in Nevada's Battle Mountain Trend, a premier gold jurisdiction producing about 75% of U.S. gold, is a standout. The project's October 2024 mineral resource estimates reports about 5.57 million ounces of measured and indicated gold and about 0.42 million ounces inferred. With the drill program launched in March of this year, 2025. Insider purchases totaling $1.2 million in Q1 of 2025 signal strong management confidence. For example, on May 1st of this year, 2025, Mario Vitro, co-founder and director, purchased 20,000 shares. On top of that, Tyrone Breitenbach, the second co-founder and a director, purchased about 50,000 shares. The day before that, which means April 30th, Mario purchased 10,000 shares. The day before that, 15,000 shares. And on April 28th, he purchased 25,000 shares. On April 25th, he purchased 110,000 shares. On the 24th, he also purchased 60,000 shares at a 15 cents Canadian dollar. Collectively, a total of 240,000 shares just on the last week of April. The team assembled to run Axcap Ventures, US stock ticker GARLF, have been involved in the discovery of over 20 million ounces of gold with the previous endeavors. Here is the value proposition. Advanced gold deposits are trading anywhere from $40 to $60 per ounce. Axcap Ventures is trading at a $5 an ounce. The company is cashed up with about approximately $10 million. Peers trade at about $49 an ounce, that's US dollars, on average, while Axcap Ventures market cap translates to only $5 an ounce. Research Axcap Ventures, US stock ticker GARLF. The business model is simple. Drill the properties in order to create the conditions for an exit at valuation comparable to the recent ones. Please do your research and remember there is always risk in investments and there are no guarantees. Thank you.